Okay. So, Eric, you asked about my introduction. So, Eric, again, I've been from the boring side of finance majorly all my life. When I say boring side, I've been a banker at HSBC as well as Development Bank of Singapore for 1 decade each. So, it's been about 20 years of banking experience. Uh, Current experience, the current one, where I lead the emerging technology platforms for a fintech called as Vayana. It's
Hmm.
about a 2 year journey now. This is my first fintech job after completing 20 years in a banker's job. As I said, I lead the emerging tech platforms. Little bit of Vayana before I get into what this emerging technology platforms as a division does. Vayana is amongst the largest supply chain platforms in India. Okay, so we are the tech provider to banks, to NBFCs, to fintechs, so that they can do more supply chain financing. As I speak, our current technology processes around $1.4 billion per month of supply chain finance. So from my first banking and supply chain finance job back in 2005, where I think we had an outstanding of about $200 million, and it was supposed to be the India's highest outstanding, to a fintech processing about 1.4 billion dollars per month. The supply chain industry in India has certainly expanded. uh, our Vayana believes in supply chain financing at all the ends. So we have purchase order financing, we have receivables financing, we have payables financing, we have deep tier financing as well. We have the last mile supply chain financing as well. And so that is what was our core proposition. Over the last 2 3 years, since World Bank YIFC has come in and taken a stake, we've raised our Series C, PayU has come in, Chirate Jungle Ventures have come in. We truly are moving from just a supply chain financing company to a fintech to a B2B credit entire stack financing company. So we've kind of acquired a credit rating company, not a license, but akin to something like a Dun& Bradstreet for Asia, which is called as Rubix. We've acquired an SME stack, which can be sort of a value added stack, or your ERP that you can put in. We've gone live with our own branded platform called as Vayana Trade Exchange. That gives us a capability to factor invoices from anywhere to anywhere. Currently, it's in Gift City, India, which is akin to a Vara or a DIFC in Dubai. We are only doing India linked business, but it gives us capability to even Australia, New Zealand corridor, Taiwan, USA corridor. So at some point of time, we would open it, uh, and which is where the new division which I had came into prominence. It was obviously the founder Ramaswamy Ayer's baby. He wanted to take what we built in Vayana globally. Okay, our immediate countries that we can portray what we've built is UAE, Singapore, Hong Kong. At the same time, he wanted to catch up on the newer technologies. And that is where this division was christened. We started with two people, that is me and the CTO of of this division, Vineet. We now are about 25 people in this team, comprising of engineers, comprising of sales guys, comprising of product guys, even legal and finance guys. Newer technologies such as Web3, such as AI, requires a different insight from technology, from legal and finance, which is why we are having this separate team altogether in the mothership. I had that team, and the very first product that we have started, Eric and Andrea, is something to do with supply chain. So we will talk more about that. But at the moment, this is what I've been doing, Eric and Andrea. It's a small role. We're trying to make a difference. Every day we improve ourselves 1%. Hopefully, we can take the industry forward in the years to come.
Very interesting. I mean, you talked about right before your introduction, you talked about the effort that we're all putting into this, right? That it's seems that we're putting in 4 times more effort than traditional. But do you see that it's worth it so far? Are you seeing some progress? Are you feeling it in your bones that the industry wants to move to a digital environment?
So I mean, Eric, when you said I'm saying 4x, incidentally, I had an appraisal discussion with one of my team members. He said it's 10x. He's apparently put 10x the
Sometimes it
effort.
feels like it for sure. Yeah.
Yeah. So again, I mean, leaving the going serious. So 2 years back when I joined, Eric, to answer your question, after 6 months of analysis of the industry, I came up with some 6, 7 points that if the industry has to move ahead, this 6, 7 points has to be taken care of. Okay. And over the last 1.5 years, I've seen that with the advent of RWA, this six more and more people are talking about this 6 to 7 points.
Hmm.
Now, how many of the 6 to 7 points have been addressed? I think pretty much 50% of them have been addressed. Okay. A lot of people are talking about how to get real world onto blockchain.
Hmm.
Very few people were talking back then how to get real world. I always thought that it's the complex side of the real world, which was the capital markets and the complex supply chain, which will move first to blockchain. I think that is what is happening currently. To answer your question, I think I expected more to happen by this time, but the industry has progressed. I'm being very transparent. The industry has progressed little bit slowly to my liking.
Hmm.
I have a fire in my belly and I would like to move a little bit more faster, but it has moved certainly in the direction. The path to which this industry headed is the right path. And I feel once the G7 acceptance comes in from a blockchain or let's say solutions around emulator perspective, that is where the train would be in a top speed. It will become a bullet train. So I think in few months' time, in let's say perhaps next year, or perhaps end of this year, the train should catch up the speed, but the direction is right.
I mean, when I started the blockchain down the blockchain rabbit hole, um, we were talking 5 to 10 years to have a certain impact on the industry, right? And I come from supply chain and logistics. I know that my industry doesn't move very fast, but I'm impressed. And you talked about fire in your belly. I think a lot of people have fires in their belly. I am impressed by the speed that the industry is changing. But to your point, again, not enough, not fast enough, right?
Not fast enough for me. I come from a MNC bank perspective. For us, it's about weekly targets. It's about monthly movement. It's not about, let's say, once in a quarter. So maybe I'm too new in this industry. Perhaps that is what is leading me to answer that particular question. Little bit in a conservative side.
Mm. So tell me about these
No,
6, 7 points of yours. You go ahead, Andrea.
no, 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 no.
No, no,
I
no,
was
no, no, no.
about
You go. Your turn.
no. I was about to ask what are the hindrances to the shift? What's hindering besides mentality, besides being old-fashioned? Would love to have your insights from the inside. You're in the industry now in the fintech sector, so I would love to have your perspective and
Sure.
what to do next in order
So
to let the industry embrace the shift in a massive way.
I mean, Andrea, you talk about hindrances. I think that's the answer to the what Eric also wanted to ask. What were the 6, 7 points I would like, and what has changed, and what more needs to be done. So again, whatever I'm sharing, it's my personal opinion. So whenever real world comes into the picture, Andrea and Eric, I'm a firm believer that somewhere or down that rabbit hole, regulations will catch up as well.
Mhm.
Okay, when you were
And
in,
we've
let's
seen the UK change their law late last year,
absolutely,
right? So that's going to
absolutely.
trickle down for sure. Yeah.
Yeah. So whilst a majority section of blockchain enthusiasts believe in decentralization, certainly there's merit in believing in decentralization. But when it comes to real world assets, it's the local regulator which will not let you go down completely decentralized manner. The
Mm.
sooner that the technology people in blockchain understands that, that's the better. It's again my personal view. Somewhere midway between decentralization and centralization has to be achieved to at least make the regulators happy. So as Eric, you mentioned, UK has come up with the ETDA Act of about M letter. HKMA tokenization laws are there. Qatar has already notified some tokenization laws. VARA has their tokenization laws. Incidentally, a conservative country like India, we have an offshore, what do you call, unit called as GIFT, which is a small island or land in a Gujarat state, which is akin to offshore. They will be notifying or coming with the tokenization norms very soon. Okay, so the first hindrance was About 1.5 years back, I did not see regulations moving up. But to answer that, now I sit here, there are a lot of countries which have regulations there which permits business. Japan also has conducive stablecoin laws. So that was the first point which I see a lot of movement from a real world there. The second point was it's the understanding of the real world sector. Too many projects were focusing on metaverses. Okay, too many projects were focusing on let me say too many things which were far down in the future.
The
Where
shiny object of the moment, right?
tiny, let me say NFTs. Okay, the tweets were going for millions on dollar. I have no problem in that. If there's an industry around that, certainly you NFTize those tweets as well. Lot less people were thinking about the real world problems around, let's say, SMEs are not funded properly. Okay, there are industry negatives. There are negative industries which formal finance just does not want to finance. For example, shipping. For example, bunkering. Okay, they have legitimate demands, but nobody's ready to finance. E-commerce, credible startups which have good revenue traction. Now I see a lot of people focusing on that. That
Mm,
was a second point. When too many brains are focused on a problem, I'm sure the solution will come.
mm,
A lot of people from metaverses and all have started focusing on real world problems. Third was the infrastructure. I think the off ramp and on ramp was a big problem 1.5 years down earlier. uh, Real world would certainly off ramp and would take it into the fiat world, the benefits of the blockchain or the DeFi. They will not be able to transact purely on digital currencies. They have to pay their suppliers. They have to off ramp it. They
mm,
need credible custody infrastructure solutions who can be relied on, not just the decentralized one. A custody solution which have enough insurance backing them. I see the infrastructure shaping up around few countries really well. Miles to go, but at least there's a start. For example, mass regulated custodians of digital currencies are coming in. ADGM regulated custodians are coming in. Earlier, it was all decentralized custodians. It was all unregulated exchanges which will do the on ramp and off ramp. So that part of infrastructure also is coming in. And because Andrea mentioned what we are trying to do is educating. That was lacking 1.5 years down the line. I see a lot of podcasts focus around real world problems. So for example, this one focused on supply chain and blockchain. Okay, so it's a real world use case. It's not about metaverse and blockchain.
mm.
Okay, so I see such podcasts coming in, and certainly education getting dispersed across. So these are few of the problems that I see were hindrances. There are obviously more, but I think work on all these aspects have come. Miles to go, but certainly over the last 1.5 years, with solutions such as XDC networks, which is focusing on real world chains like Hedera, Polygon, having dedicated real world divisions. I think a lot many industry stalwarts are focusing on this problem. I'm sure with in the months to come, in the days to come, in the years to come, this will be solved.
And we're seeing the words real world asset tokenization a lot more these days, right? Over the last few months, at least.
It's becoming like a buzzword, you see.
Yeah, the new buzzword is the real world now, right?
Real world.
Yeah. So
I
how
wanted to ask you this, by the way, Manish.
Yeah.
You were talking about real world problems, real world assets. What's your perspective into this? And what's your take into this specific field? I think behind the buzzword, there's a good value in that. Where is the right direction to undertake, in your opinion, in that specific space? Because I know that there is value in that, but we have to make it clear on what RWAs is about and what to focus primarily. Sorry, Eric, for interrupting you, by the way.
No, so Andrea, you've hit the nail on the head, as you rightly mentioned, buzzword. So I think when we started this division, the buzzword was around metaverse. Then came NFTs, and this year certainly has been RWA. We started RWA back then when it wasn't a buzzword. We never used to call RWA. The industry has given is the word real world asset. We used to say B2B credit on chain. That's what we used to say. It's getting trade finance on chain. Those were the words that we used to use. Thankfully, at least the industry has given this a proper RWA kind of word. Now, to your question, where do you see the real value of RWA coming in? Uh, there are protocols targeting various aspects of RWA. Some targeting purely bonds, which is the capital markets. Some create some like XDC creating the entire ecosystem of RWA. If it's RWA, this would be the ecosystem. Some RWA players are focusing on liquidity on RWA. Okay, our approach is aligning with what historically Vayana does. Is we will come up with solutions to reduce the B2B working capital gap. It's as simple as that. Okay, B2B, facilitating B2B credit. It's not P2P. We don't handle the retail side of it. As long as it's B2B credit, our solutions of RWA are hovering towards that. From our initiative perspective, we want every country to have one platform on chain, tackling this particular perspective. So, going back to my earlier example, back in 2005, India had one or two companies in supply chain. I'm in the business district of India, which is in Bombay, Bandra Kurla complex. If I shout supply chain finance right now, just in my lane itself, there'll be four fintechs raising the hand. We'll be doing the supply chain. So, so we want one fintech at least in one country to take up blockchain based B2B credit, which is where we've launched a Vayana debt platform. It's a SaaS based platform. You don't need engineers. Just white label it from us, private label it from us, launch a B2B credit on blockchain platform in your country if it meets the regulated norms. If you want to go with the decentralized way, do it. It's essentially the concept of that platform is very simple. There are pockets of capital which are surplus in few countries. For example, Canada, Eric, where you're from, you have lots of money, be it pension funds, I think, and yeah, you have lots of pension funds, lot of funds houses there which want to deploy onto sustainable returns.
Yeah.
Some of the other countries, such as tax haven countries such as Cayman Islands, Liechtenstein, okay, countries such as Singapore, which have APAC family offices. So capital is surplus there. There are credible emerging market countries where capital is in deficit. Countries such as India, Vietnam, Indonesia, okay, some of countries in Eastern Europe as well. The idea is use this platform to ensure that the capital from the surplus country moves to capital deficit countries using an efficient cross-border mechanism. Don't go by the Swift way, go by the DeFi way. On ramp onto a blockchain in a stable coin or whatever coins that which you are comfortable with, and then off ramp in the country where there's a capital deficit. On early double-digit returns, which are credible returns and not speculative returns. Yes, I know the crypto industry is again on a bull run. Okay, you are getting plus 20%, plus 30% returns there. But my request to all the liquidity providers is don't do the mistake which you did the last time. Okay, don't put all your eggs in the crypto basket. There is something called as stable returns, which is early 11s, 12s, 13s, 14%. Put certain percentage, a small percentage of your portfolio onto this stable return and ensure that you have diversified enough so that tomorrow your 100% of portfolio is not into speculative risks. So this is Vayana Debt Platform. This is what we do. Okay. The investment would be in a pool which will be towards trade finance and real world assets backed by real credible research. So pools of capital which would be asking for money would go through that particular multiple gates. Only when they go through multiple gates would they be allowed to be listed. So by virtue of we having a credit rating company in our portfolio, we prepare for each and every borrower a 20-pager memo. We do each and every research about that, and then we put that borrower up for, then we put that particular pool so that the investors can invest in. It's not like anyone who wants to borrow can come up there. It's only credible institutions. We have a Vayana business score which can be availed. It's a score from 0 to 100. You can look into that score and then think of investing. So it's beyond tech. We can source borrowers, we can do some credit risk consultancy. uh, for lending in real world, you need to ensure that the documents which you sign with the borrower, it's enforceable in its home jurisdiction. We have a network of legal lawyers wherever we deploy the VDP SaaS. So we will ensure the legal documentation is given to you is enforceable in the country where the borrower is. Otherwise, you are sitting in Canada, you've given loan to someone in Singapore, and there's a default. You don't even know that that agreement would be locally enforceable.
Mm.
For enforcing that document, you would need a local lawyer. So the entire, Eric, I would not go into too much detail, but the entire infrastructure alongside the tech is there. So that's our small endeavor, and offering which we are doing in real world. Like I said, a lot of people are into many things. This is the industry that we are in, and for the timing, we would focus on that. This industry would be moving towards tokenization. POCs currently are going on. We will be building modules around tokenization as well. So tomorrow, if somebody wants to tokenize the entire set of cross-border documents, once the M letter kicks in, and the ownership of documents needs to move, let's say, from the borrower to the investor. So that is where the tokenization module also would come in. We are already starting to build that as well. So this is the industry that we are developing. So I started with the hindrances and I've ended with what we are trying to do our small bit in this industry.
So do
Hopefully,
Just a
you
Andrea,
have
question.
do
but I
you
hopefully
have real world examples that are in use today?
so real world. So for example, we've gone live in Hong Kong already, Eric and Andrea. Okay, there what we are trying to do is fund a revenue-based financing startup. So there are a lot of SMEs who want to get their invoice discounted. Number one. Number two, they do a lot of transaction on e-commerce, buying and selling.
Mhm.
These are B2B transactions. So this particular startup is into financing of that. We're trying to arrange digital currency financing, using the VDP SaaS platform for such people. Bunkering as an industry, okay, is very credible.
Mhm.
Okay, ship owners have once they clear a dock, they have they get refueled.
Mhm.
Okay, at the local level, they need to pay in advance or immediate payment to the oil companies. They may not have that. They may need about 7 to 45 days of credit. So we are trying to facilitate that kind of financing using digital currency financing. There are a lot of growing startups, okay, which have demand for about, let's say, hypothetically $25 million, but formal finance gives them only $5 million. To such credible startups which have got a gap of credit, we're trying to fulfill those needs using digital currencies. So these are some of the examples, Eric, that we are using. We want to very soon develop or have examples around M letter as well.
Mhm.
Okay, M letter very soon. Next year would be the buzzword. So that's the buzzword, Andrea. I feel for 2025. For folks who are in the industry, it's already a buzzword for people like you and me. But I believe
Yeah,
come
absolutely.
2025, this would be the buzzword for most of the institutions. From RWA, people will move on to M letter. So slowly but surely, I would want to do some experiments around M letter, wherein there may be an exporter who has M letter standard NFTized cross-border documents. I want to take that up and I want to discount that. I see that as a very credible financing opportunity. These are the few instances, live examples, Andrea and Eric, that we've been working on at the moment.
Very cool. So if people want to try something out, test your platform, what would be a good first step for them to look into what you guys do?
So, I mean, so when you say, Eric, people, so let's say uh, I would
Business, because again, B2B, right?
yeah. So let's say there may be all kinds of businesses. There may be businesses who want to borrow. A. There may be businesses who may have surplus treasury. They may want to invest. At the same time, there may be businesses who want to, perhaps in their own country or region, may want to have a VDP SaaS instance deployed so that they can facilitate lending. So I would divide that into three. To each of these categories, I would say the next steps. So let's say if you're a business based in APAC, We have a platform live in Hong Kong. Very soon we would go live in UAE and Singapore. You can contact us at Vayana.com. There's a page called as Emerging Domains. We would put you in touch with one of those platforms if you're in these geographies. If you're in other geography, okay, at the moment we don't have solutions, unfortunately, but we are in talks with
Gotta
people in
start
Europe.
somewhere.
Yeah, we're in talks with people in Europe. We're in talks with people in Latin America. Very soon we may have platforms there. At that opportune moment, you may have your pool there. Okay, if you're a fintech, any part of the world, it's a VDP, it's a SaaS. You may be in any part of the world. From in a month itself, you can take the SaaS, go live. Okay, I mean, for us, it takes about less than 30 days for you to go live anywhere in the world. Now, if you're an investor, as long as you're not from a sanctioned country or you're not from countries such as US, which puts a lot of challenges for investing into digital currencies, you can contact us. We can put you in touch with any of the platforms, be it Hong Kong, Singapore, or Dubai, and you can start earning returns of 11 to 14% right away. So that is what we will do. You can go to Vayana.com, emerging domains. You can contact me on LinkedIn. I can, facilitate that interactions right away. So it's not going live transactions. We've already gone live. We can do the transactions from tomorrow itself. So in a nutshell, this is what we can do, Derek.
Very cool.
Just a final thought, maybe, Manish, that interests me. We're talking about paradigm and we're talking about commodities in supply chain finance, and a shift in paradigm from purely financial ones to broader one brought by the new instances. Are you also targeting that specific field, namely ESG, SDG? What's your perspective for the near future and in the more and in the longer term? What's
So
Vayana's take into that?
So, Andrea, I mean, in fact, the question comes at the right time. Just last week, I chanced upon a report by Citibank. They had mentioned the early trends or the next trends of supply chain. They had mentioned IoT based supply chain. They had mentioned ESG based supply chain. In fact, they had mentioned tokenization. Quite a lot of things, including M letter, was mentioned. So at the moment, from that particular next level of supply chain, what interests us are few things. So one, tokenization I've already spoken about. So back at my earlier bank, one of my bankers, we had deep tier supply chain as one of the concept, wherein I don't give you the entire money. So let's say if you are a supplier and you're discounting the $100 invoice from me, I will give you $40. The rest $60, I would give to supplier. I would give to that particular suppliers to supplier. So I will end up lubricating the entire supply chain. Back at that bank, we used to call this deep tier supply chain. Giving tokens not just to immediate supplier, but to your entire chain. So I think as a next step, we would want to experiment a bit more on deep tier supply chain with the advent of tokenization, laws around tokenization coming in.
Mhm.
This particular specific example may come to reality. So we would want to experiment more on that. VDP, the SaaS that we have launched currently, we have purpose-based term loans as the only loan that you can avail. I would want to add the supply chain module there as well. Uh, every actor who enters my platform or uses the platform have to undergo entire KYC again. Can I use blockchains, ZK proof technologies with global LEI coming in and Web3 IDs coming in? Can I reduce that KYC burden on the actors on that my particular platform, whoever is using it? I would want to work on that. Currently, embedding carbon credits or ensuring that the carbon footprint gets traced from end to end, is not on my immediate short-term radar. But I see a lot of demand from corporates around that. With more ESG coming into prominence, with regulations around ESG coming in most of the countries, I think, sooner than later, it will become an essential part of anyone who's into financing. I know that fact that in a fiat world, ESG has already made inroads. In fact, in India itself, as early as last week, it has become a mandatory requirement for anyone who is into lending to have a dedicated ESG paragraph before they lend to anyone, to ensure that the impact on environment, what kind of governance is being followed. So I see ESG, Andrea, coming in very shortly, but from an early supply chain trends perspective, I would rather focus on eradicating the inefficiencies around KYC. Can we have global LEI used for businesses so that they don't have to walk that whole 9 yards to do KYC again? Okay, these are some of the challenges that I would tackle first before I embed ESG related norms. So
And
I hope.
before that, we just need to get rid of paper altogether first, right? So yeah, we have a lot of steps to go through.
Oh yes, Eric. I mean, M letter. France, I'm told, is next on the M letter radar. Okay. Uh, Japan. In fact, the G20 was held in India last year. G20 nations passed a law that very soon they would want to digitize cross-border trade. Only 4% of the trade is digitized. 96% happens on bunch of papers. Okay, imagine those trillions of dollars just moving lock, stock, barrel electronically. And Eric and Andrea, basis my analysis, it's the blockchain platforms which will are geared up to tackle that particular magnitude, to come on to cater to that particular magnitude. The proof of trust, the single source of truth, getting the entire actors on one particular common source of truth, one ledger, the safety. It's the blockchain platforms which will tend to benefit most, and not the cloud ones. So I am hopeful that once G7 completely moves on to the M letter, trillions, not billions, trillions of dollars of trade finance will happen on blockchain.
And
Yeah,
it will be only the beginning.
it'll only be the beginning. I mean, that would keep all of us serious players happy. Okay. Yeah. So, that's the watershed moment of blockchain finance to my mind. I'm just waiting France to pass this and more countries to adopt M letter as soon as possible.
By the end of March. So it's gonna take a few days more.
You are already aware.
Well,
What about your home countries, Canada and Italy? Is it already through
Oh,
or?
it's taking longer for Italy to hop in, but
Okay.
we're on a good way, hopefully.
Yeah. So
And I
once
think
the
also Canada
yeah.
is ahead of fate.
Yeah, I think Italy would be with EU. But in fact, I thought that it will not be just France; it will be EU entirely which will
Now,
pass. But
first is France, Germany will be the next, then Spain, then most probably it's gonna be Italy with somebody else within the. That's my mouse. That sucks. I'm sorry. No, no further questions. It is more than enough and a great
more than
bulk
you
of
can say, I
content.
guess.
What's it? Pardon me, Manish.
Sorry?
I didn't pick it up. What were you saying?
No, I was just, I said more than you wanted, I guess.
No, no.
I was more
It's ex
conservative than what you had hoped for.
we can talk about this stuff for hours and hours, right?
yeah. No, this was highly satisfactory on my end, Manish. I really loved every word you spread, and we're fully aligned. I really like working with professional like you, and eager to go more in depth in the future. This
Mhm.
is
Sure.
the goal of this kind of events that we are doing. We are focusing on this because we think it's more effective. Just between professional, we sit around the virtual table in a very relaxed,
Mm.
informal way, sharing ideas to be all successful because we are all into this
Sure.
challenge. So
Thank you
this was
for the
perfect,
opportunity.
on time and very effective.
Thanks so much. Eric,
You're more
anything?
than welcome.
Yeah. Any?
Again,
Yeah.
we're looking forward to being inspired, right? So as you have new use cases, as you have new successes, let us know. We need to inspire the rest of us here. Fire in the belly, you said it best, right? So
Thanks so much, Eric and Andrea, for the opportunity. And please feel free to reach out in case you guys have any advice for us. You guys are talking to who's who of the industry, thick of action. I mean, we've been in this industry for about 2 years. You guys have been for X number of years. And in case there's advice, there's low-hanging fruits that you think
Mhm.
organizations such as ours can add value, we are just a phone call away.
So India, Dubai soon, Singapore, where
Hong Kong
else?
already live.
Hong Kong.
Yeah, so these are the core markets. And but again, it's a tech business. We go wherever the opportunity is. So in case, so I mean, a lot of people from Europe per se have been reaching out to us. In case something materializes, very soon you would have a Europe division of our division as well.
I mean, supply chains are global, right? So if you're dealing with Hong Kong or India or UAE, doesn't mean that you're in any of these countries. So they could reach out to you anyway, right?
Yeah. In fact, just yesterday, India signed a Eastern European Free Trade Agreement.
Hmm.
I'm told that the India-UK Free Trade Agreement would be out and signed this week.
Oh, cool.
So, okay, Singapore and UAE with this, and as well as Hong Kong are already world hubs with
Mhm.
respect to a lot of financial
Yep.
exchanges. So hoping that the success of these 3, 4 countries, we can then, basis the feedback, basis the experience, we can project even higher. We can go to further developed markets such as London, even Canada, some more countries in Europe. Brazil, incidentally, have good partnership with Asia. So
Mhm.
these are the corridors that we would like to be present with. Wherever trade happens, I see value of blockchain and supply chain finance there. Yeah.
I would tend to agree. So what
Okay.
for last question for you? What do you see as the next shiny object? I mean, although we try to stay away from the shiny objects, right? Because we're business, what do you see as the next evolution in this technology? You touched on IoT. We've touched on DLT, right? Blockchain. We need to continue the work around the automation portion of all this, right? The smart contract side of things. But what do you see as the next emerging technology that your world is looking into?
So Eric, incidentally, you asked me. In fact, I forgot to add this particular point. So good, you asked me this question. Uh, the central bank digital currency
Mm-hmm.
is what was missing. You see, the stable coins typically are private companies backed.
It's still crypto. Yeah.
Yeah, it's still, it's even if you keep fiat, and you yield, let's say you release stable coins, you mint stable coin, still it's by private parties.
Mhm.
Okay. Regulators, I've interacted with most of Asian regulators, they still are not so confident. In fact, UAE, which is supposed to be the mecca of crypto, get jitters when I talk about, let's say, a prominent stable coin.
Mhm.
Very reluctantly, they even like to mention about that particular stable coin, which is where I am hopeful of central bank digital currency, which is nothing but a central bank stable coin. I mean, a lot of people would go against me if I say that, but the matter of fact is most of the digital CBDCs are going to be blockchain based.
Mhm.
GCC has adopted R3. Most of APAC is going Hyperledger way. Europe, I think, is going Hyperledger way. Yes, it's private permission blockchain. It's not public, but it's blockchain. The things around stablecoin, the programmability, the
Mhm.
standards around ERC 20, 721, all would be part of the CBDCs. So what I'd say, essentially, once the onset of CBDC will do is everything that we want in blockchain would get regularized, and we'll be able to do it in the official manner. So the programmability around supply chain, I talked about deep tier. I need to give to my immediate supplier $40. The supplier's supplier $40 more.
Mhm.
I'll be able to program it in CBDCs. I need, I need the allowance feature of stablecoin. CBDC, by virtue of being on blockchain, I'll be able to pull the money on the due dates.
Mhm.
So all the aspects, good things about supply chain and blockchain I would get that in a regulated manner in CBDCs. CBDCs will be interoperable. No more I will have to rely on Swift, where I have to wait for 2 more days for remittances to come in, pay FX charges. It'll be automated. There'll be automated market makers which will, cross pollinate, cross exchange CBDCs. So what we want to see, what blockchain would have led to, I think in a regulated manner, CBDCs would do that. So that's a new buzzword. That's a new underlying statement that I would bank for. It's not coming in 1 year, 2 years. My own view is in another 3 years, we would see the early volumes of CBDC domestically as well as cross border picking up. So my bets are on CBDCs currently as a
So
solution.
3 years CBDCs, you've heard it here.
Fingers crossed again.
Fingers crossed, absolutely. I mean, a lot of countries are working on it. A lot of countries are pushing ahead. So yeah, hopefully we'll see a bit of a mass adoption coming very soon. Manish, it was fantastic talking with you. Thank you very much. Supply chain financing, right? The big guys understand it. The smaller guys or smaller companies need to have access to it, and hopefully people like yourself and your platform can help out.
Thank you so much, Eric and Andrea, for the opportunity. Hope to talk to you again soon.
Likewise.
Yeah,
In 3 years
likewise.
we'll catch up to see if your
I
CBDC
was
gets
hoping
is
in
done.
about end of the year you would catch me again.
There you go. Andrea, any closing thoughts?
No, I only want to thank Manish for being with us today. It was fantastic talking to you. To the pleasure of doing it again soon, Manish. Thank you so
Thanks,
much.
Andrea. Thank you so much. Bye bye. Have a nice day
See
ahead.
you soon.
Thanks,
You
guys.
too.
I'll
Bye.
start